I think people do generally kind of feel like we might have maxed out what can be done on DeFi right now outside of just like kind of like meme coin speculation and just being like the first to like hit like a SexDex ARB. And like maybe that's not like a horrible thing, but I think in general it'd be nice to be able to just do whatever you want in all of finance, just like on chain.
Quick shout out to today's sponsor, Algorand. We'll hear more about their AlgoKit 3.0 and how it's built to supercharge your app development on Algorand later on in the episode.
Nothing said on Kairos Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
Hey guys, welcome back to another episode of Kairos Research. Today I'm joined by my lovely co-host, Boccaccio, and we've got Ian and Teddy from Kairos Research joining us today as well. How's everyone doing?
Good. Thanks for having me on, man.
Always a pleasure.
Yeah, doing great, guys.
Doing pretty well. I enjoy coming to these.
Awesome. Love it. Well, while we do love having you guys on, before we get into anything, Bach and I, we've got to talk permissionless. It's coming up end of June. Get your tickets, 10% off, link in the description. 0x10 is the code. Lots of crazy stuff going on at Permissionless. Bach, what are you most excited for?
Wrestling Westy. And the Zurich. No, we have a few things. I think probably most excited for is like activity wise, probably the dunk tank if we can get it. I'm probably not supposed to actually say this, but we might be able to dunk Jason Yanowitz. We need to figure out a pool that is deep enough that it works out. I don't know if you guys met him, Ian, Teddy. Teddy, you seem tall, so it might not bother you. Ian, you don't seem that tall, but he's kind of very tall, a lot taller than you expect him to be. So we need to figure out a way to do it. But that's probably what I'm most excited about, the dunk tank. Apart from that, just meeting people. I had the pleasure of meeting James Kristoff the last time we had an event in New York, who was like a very big podcast listener, big podcast guy. And it was fun. So I'm excited to meet everybody else. If you are a listener, come to Permissionless. If you can't come to Permissionless, ping me on Telegram and so that we can get you to the Kairos Research side event. I'll try and sort it out, even if you don't come to the event. This is not a good advertising, but please.
It's exclusive, but it's not exclusive. If you're going to be there, definitely come check it out. I think it'll probably be the most fun part of the whole event. We're working on making it that way. And I know, are both of you guys going to be there, Ian and Teddy? The Kairos Research boys should be there.
I'll be there. Teddy has a wedding like that weekend, so he might have to miss out. But I've got a pretty exciting doubleheader with that, and then Teddy's wedding.
I spent a lot of time thinking about the priorities, but I'm just going to send Ian in my stead that week.
I'm pretty sure crypto's a little more important, but we'll let this one slide, and we'll see at the next one, I guess. But yeah, for anyone out there, for all the listeners, one, join the Telegram. You'll meet James Kristoff in there. Understand his legacy. 2, check out link in the description, 0x10, 10% off tickets. We'll see you there, end of June. Let's get into it, guys. Let's talk markets. I think Box reaction. Let's talk markets. It's been crazy couple of like weeks and maybe months at this point, I guess, since like March, April, when it was doom and gloom for everybody. The macro picture was people freaking out about Trump, the administration, tariff talk, 100+% tariffs on China. Recent couple of weeks, people are excited again. I think some of that is like walking back tariffs, coming to deals, what have you, whatever it may be. But lots of crypto charts and tokens look much more interesting and volatile than they did a few weeks back. How are we feeling? Are we looking at anything in particular? I know you are, Bach.
Can I just say something? It is unironically the art of the deal. Like, it worked out. I don't want to macro art. I do think that the way that coins are going up kind of shows the main struggle of being a liquid investor or an alt-focused investor, is that it really doesn't fucking matter how much fundamentals you look at. What does a bit, like 30% previously, it was 15%, let's say. But the thing that is leading is virtuals was up like gorillions last week. think it makes like $25 a month. Initia, which I love, like I like the team a lot, but they don't have anything live. So it's up tremendously. So I think it's like, it once again shows you. Do you guys know that meme where it's like the woman that's like the square and she's putting it into the circle thing, and then it's like again. It's that thing where it's just like constantly we're just buying stuff with no fundamentals, and it's just kind of a tough thing to say because they just launched, so I don't want to really shit on them. And the guys are cool and the project is cool, but like we're not sending up like, what is the cash flow stuff that people love, like Radium? I guess that's also up. You get the general gist. We like immediately go into dog shit mode in crypto, and I really enjoy it, but also it makes me sad.
Yeah, it's kind of funny. Like whenever there's some like big liquidation event and then like some squeeze or move up, it's always, yeah, to Bach's point, like the dog shit coins that run the hardest immediately. Because I think like if you're like a fundamental investor, you're not waiting for these moments to actually buy in. Like you're buying hopefully when everything is a little bit more chill and you're making you're placing your bets there and you're underwriting appropriately. But yeah, and this has been pretty interesting. It's definitely getting kind of like a cult following pretty fast. I don't completely know what they do, but you see it all over the timeline. I mean, there's quite a lot of like people following it and people trading it, despite kind of things not being live over there. But yeah, I think that's been pretty interesting to see.
Ian, we should probably disclose we put $500 into that go around and into Initia.
Whale alert.
So obviously, we haven't done much research, but maybe it's time. 3 months after.
Thank you very much for the disclosure. I appreciate it. I can give a short rundown of why I think Initia is doing well if you guys aren't very familiar with it. I think they launched quite low. I think they launched at like 100 million market cap circulating, which is I think a lot lower, and it's they have actually a few things live. So they have Tamagotchi, which is kind of like Tamagotchi but on chain, mind blowing. Which is my brother, who is a recent graduate who hasn't been able to find a job yet, has been grinding Tamagotchi for the past 2 months. Like it's all he does, and he doesn't do anything else crypto. He just like enjoys the game for some reason. We're gonna get him tested. But apart from that, he's also just like that game. I've also seen it on Twitter all across. Like people just genuinely love it. So I think there's definitely stuff there. They have a few lending markets launching. They have another game called Civicia, which I think already launched at Back to Block. But overall, I think this is just like it's supposed to be Berachain similar. Like they have a kind of a similar. They both have like that vested interest program thing. Well, Berachain has proof of liquidity. It's a similar concept, like feeding in loops. And I think they just launched at a low FTV. I think that's a good sign for teams to finally see that. Like if you launch something at free build, you're a marginal buyer. Like there's no new buyer. Versus if you launch something at whatever it was, like 500 mil FTV, maybe less, people will say, okay, well, this actually could potentially go up. And then you have idiots who, not idiots, but community believers who want the coin to go up.
Yeah, I think there's something to be said to like building an ecosystem by launching at a fair FTV. Well, I mean, even is 100 million fair? I don't know. I can't say if it is, but like letting people experience some upside makes them actually want to come use your product rather than being like, oh, the last private round was at 2 billion.
Yeah.
Why in the world did I touch that?
Yeah, it gives me 2023 summer vibes. Like I'm thinking, even if you don't rate Say, for example, like they I think launched at a couple hundred mil market cap, and then if you look today, like Story, Bera, like think about all the recent bigger token launches, it's like all billion plus market cap starting valuation. So I mean, I think there's a point there. Like if all these networks are brand new and they don't do anything, like why are you going to bid the thing that's 2 billion versus 100 million? Like
yeah. Exactly. And especially if you don't have, like at that point, you're betting on an early startup, like a very early startup that you're projecting to potentially onboard protocols and eventually gain some form of like revenue and like a sustainable business. And like you said, if something is at 4 billion versus at 200 mil, you want to buy the thing at 200, especially if it has the same outlook. Which I think they do, like Initia versus Berachain. I feel like they have the same system. but also on Twitter, people are very, very loud about Initial. And like you mentioned, like Robert Chang for 3 weeks just bull posted Initial, which I thought was funny. Danny, we kind of glossed over this, but I want to give them the chance to do this. I don't know how many times people invite Ian over to podcasts. Guys, do you want to give a short introduction on Kairos and what you guys do? Because I kind of know, but I feel like you guys pivoted since the last time Ian was on the pod, or you've expanded is a better way of putting it.
Yeah, sure. Yeah, we've definitely expanded. So like a quick kind of background on Kairos, and I guess like Teddy and myself. Prior to Kairos, Teddy and I were both at Binance on the US arm there. So we did listings, staking, kind of growth. Pretty lean team, learned a lot, really liked the Binance environment, moved really fast. And then we kind of saw a gap in the research market, I guess, where there was obviously like we think like crypto is going to be like a massive market. And so we think there's room for like some boutique shops to really show up and kind of play certain intersections really well. And our kind of niche that we're looking to corner is kind of around like DeFi and the staking economy and kind of everything around there. Because like if crypto is to kind of fulfill its grand vision, I think a lot of people think it's going to. It's really going to just be another kind of economic system just on chain. And I think having an edge on how these mechanisms work and function early on is, and having these relationships with these teams is very helpful. And so we've also kind of looked to deepen our research by expanding into staking and node operations. So we're currently live on Babylon and Solana, and we're looking to be on a few more networks by the end of the year as well. But yeah, that's kind of the expansion we've had on. But Teddy, if you want to add anything there, go ahead.
Yeah, I'll just chime in. I think in a way, Kairos is kind of like a passion project in the sense that we get to work on whatever we're interested in a good way. And I think this is probably similar to Blockworks too, where there's a lot of freedom to actually like work on what you're interested in. And if you hire the right people and have the right people doing that research, usually that kind of relates to the broader audience too. So we get to spend a lot of time with projects we actually think are building something pretty cool and should be talked about and should be explored. And then like we'd like to kind of get involved any way we can, whether that's research or governance or staking, and spend our time following them and seeing how they do. So
whether you're building DeFi protocols, enterprise solutions, or next-gen dApps, AlgoKit has all the tools you'll need to build faster, safer, and smarter on Algorand. AlgoKit 3.0 now offers native TypeScript and Python support, visual debugging, and seamless testing. Build, test, and deploy with tools designed for speed and simplicity. Start building with AlgoKit today by following the link in today's show notes. This episode is brought to you by Ledger, the global leader in digital asset security. Celebrating 10 years of innovation, Ledger remains the most secure hardware wallet for your crypto and logins, trusted by 7 million users and securing 20% of the world's digital assets. Follow the link in today's show notes to grab your Ledger now.
Since you guys went on Solana staking, what is something that you realized before that you think the market might not know? As in, like, since you started doing all of this, is there something that you came up with that was like, wow? Like, one thing that when I was reading over Marinade, I realized is like validators make a shit ton of money just because of priority fees and how it hasn't been adjusted yet to be switched to be paid out to the delegates properly. Is there anything else like that you've noticed?
I think there's a lot of lessons that we learned from Solana just coming online pretty late into the network's still like nascent history. But like, there's some validators that have been in there since Genesis, and they just made an absolute killing, thanks to their high conviction early on. But it's definitely difficult to break in. I'd say it's the most competitive validator market in all of crypto for sure, because to your point, Bach, like there's a lot of economic opportunity there. And I think like they continue to win out. It's the same thing you're also seeing with Hyperliquid. Hyperliquid's val set is extremely difficult to get into. Obviously, it's like much smaller, but I mean that also just makes it much more competitive in that sense too. But yeah, I think there's some interesting things that are happening over on Solana now. With like initially we got involved with like the foundation delegation program, and now they've announced that like if you don't have any, I think it's above 1,000 souls staked to you outside of the foundation, within like 18 months of joining the program or something like that, they're going to take your stake away. So looking to continuously make the Solana validator ecosystem more and more competitive, just like through natural market forces. And ultimately, we think that's a good thing. We want to be there to compete with a lot of these other guys over like the next couple decades. But yeah, I think we've just kind of realized how mature the Solana ecosystem really is. Like the validator calls, the validator community calls are just extremely high quality. You get to hear from like the Financer team, you get to hear from DoubleZero. I mean, Solana as a whole is just maturing extremely fast. And then also like last week, I went to they have like a policy institute now, and they poached some really great talent from the Blockchain Association. And their message at this event I went to in New York was pretty clear. Of like, if you're building something and the regulation around it is unclear, or if there's none for that matter, like let us know what you're building, and we'll get you in front of folks in DC and try to actually get laws built around this, which is great. I mean, can you imagine anything like that a year ago? I was just sitting in there thinking about how desolate it was a year ago, of like literally having the administration essentially trying to kill you, business wise at least. But yeah, I mean, it was nuts. But yeah, I've just been blown away at the quality of that ecosystem.
Very good.
Yeah, I'd second all of that. Like coming into a validator set late is a whole different game than coming in early. And I think the open question is still like, how do you go about get stake when you're not one of the first 20 people on that list when somebody goes on to look who they want to stake or delegate their stake to. So I think we've learned a lot about that, and like learned a lot about the stake pool ecosystem around Solana and who you should talk to and kind of what value you can add to the ecosystem. And then, of course, you can send Ian around to these events and have him beg people to stake their 7 SOL with us and just bootstrap it that way. But it's cool. I mean, it's fun to work from 2 different angles, being kind of an initial validator for one network and then being several years late to the game on another one, especially when like the validator set's all competitive in terms of performance.
How do you guys think about, or have you thought about this at all, the rise of like the strategies of Solana in terms of these businesses who are doing raises and then buying SOL and thinking about like running their own validators and setting up services around that? Like, do you think that it's going to be another sort of credible piece of competition coming into this marketplace?
I definitely think that's a really interesting angle. I'm not entirely sure how it pans out from a competitive standpoint right now, because like a lot of them are just focused on outside of, I'd say, like SOL strategies, which acquired StakeWiz, or Lane is who he's known as, for I believe like the letter of intent was like 34 million, and this was a validator that had like around it was a top 100 validator, so I'm not entirely sure how much SOL it was, but it was a decent amount. And he's a massive value add to the team. They also bought Orange Ventures, I believe it was. So that's Max Kaplan, and he's quite sharp. He knows the ecosystem really well. And these other guys that I've seen pop up, a lot of them trading on some Canadian stock exchanges. I'm not entirely sure what their angle is or what their edge is. They seem to just be doing this from like a capital focus standpoint. I don't know if there is a grand strategy. Maybe you guys could get them on the pod and make them, kind of talk next to each other. I think that'd be kind of interesting to hear how they stack up, because there's like 6 companies doing this now.
Yeah.
And I mean, they're continuing to buy not only SOL but also validators themselves. And it's like how much of that delegation is sticky as well. I think it's like it's their business to underwrite that. But yeah, I mean, it's a really interesting thing. And I think that's also kind of been like a structural buyer that we've seen for SOL over the last couple of months, where that was one of the first ones to, one of the first, like, I guess call it altcoins, or one of the like majors that's not non-BTC to bounce off the lows. And I think it's because you did have like actual kind of structural buyers here that were not necessarily sensitive to value, like the current valuation or anything like that.
Yeah, it's interesting. I think we'll see kind of if they're late to the MicroStrategy game of just like trade several times above your book, then it just makes sense to go out there and make these acquisitions and buy SOL and buy Bitcoin. I don't know if a lot of the MicroStrategy initial move is like people were able to get exposure to calls on MSTR when they couldn't get options on Bitcoin in the US, and like that just gave it some positive drift. Like the absurd demand for that gave it positive drift and allowed it to trade at several times its like book value of Bitcoin, and then allowed it to kind of have this novel mechanism. It seems to have been working for these Solana forks of it too. Like I think they're all trading at multiples of their Sol holding. So I think it's interesting. I'm cheering for them, I guess, but I think we'll see a lot within the next year or two on that. But yeah, you guys should definitely talk to them. I'd love to hear a little bit more.
Yeah, I'd like to understand kind of like how they're underwriting these investments more or less, and like if they're kind of worried about any if there's like 6 companies playing the exact same game with like a really volatile asset, like much more volatile than Bitcoin even, and like lower liquidity. It's like is there contagion risk at all if we're to go through some like tail risk event or anything like that? But
I
who
think
knows?
on the validator side too, they're doing the private equity model too, where they bring some amount to closing, and then you have to keep your validator TVL over a certain amount for the foreseeable future. So they're not like fully just buying these validators out. They're like, no, you have to continue to keep the stake or grow the stake in order to be paid out this whole amount. So I think there's some upfront payment, and then there's a holdback for a few years. And I think it's interesting too, like seeing kind of who the largest stakers are on Solana. Like, are they nimble enough to move once they realize that like, one of these companies that now controls the validator? It's all kind of interesting questions.
Yeah, I on the structural flows thing, I think we're also supposed to get the Solana ETF over the next 100, or like a decision on the Solana ETF. I don't know. I expect it to be a positive one, but I don't expect that to get good flows, to be honest with you. I think institutions don't seem to have a huge appetite for altcoins. I feel like they're just one-shotted by the store of value narrative, and that's all they want.
Yeah, I think it's like yet to be seen. Like we'll see like when it actually happens. Like at first I thought it was like, okay, are these kind of companies that are buying Sol like this is just trying to front run ETF flows of any sort, and it's not entirely clear. Like unless like they all know something that we don't. Great, but like to my understanding, it's still pretty hard to uh, yeah, like get institutions or any sort of allocator to buy into like the ETH ETF. But obviously, like those are two very different chains in terms of Rev or however you choose to like underwrite that investment. Yeah, Rev mentioned. But yeah, I think that's a pretty it's like yet to be seen how exactly these flows will stack up. But I definitely think there's a compelling growth story around Sol that is not the same for ETH in terms of it looks a lot more like a traditional tech company, I would say, as opposed to ETH. But we'll see.
I think it's interesting too, like the dynamics of the prior ETFs as well. Like, I don't think it's clear. I mean, I see opinions on both sides. Like, oh, the Bitcoin ETFs are showing institutional demand for the products, but then you hear like folks from BlackRock and different larger firms saying like, these are largely retail customers still today. And then the large funds that we see holding them are, the millenniums and whatnot that you assume are taking, trades. Maybe they're making basis trades or other things and not taking like a directional stance or like a long-term view on the asset. So I'd say it's still really hard to like decipher what like the Bitcoin and even the ETH ETFs even might translate to or mean for additional ETFs to come, because people are pretty mixed on what the flows and who the buyers are today.
Yeah, I know that there's definitely a lot of like RIAs too, and like wealth management people that are advising their clients who it's maybe even in like the retail account to just like allocate some percentage of their account to Bitcoin. And I've heard that kind of through and through. So, I mean, maybe that's something where it's like institutional capital in a sense, just because there is somebody that's advising their clients to take on some amount of crypto exposure, but it's still technically retail flows. I think it's interesting too. Like that makes me think too about who the bid on ETH was over the last couple of weeks. Like it obviously wasn't ETF buyers. Like there was been kind of it was Boccaccio fully exposed. But yeah, I mean, Bitcoin obviously had significant ETF inflows over the past week, and ETH didn't, but ETH made the move that was 3 times the size of Bitcoin's as well. So it's like, what's going on? I think that Ian and I have chatted a little bit about that too. I know it's been a conversation on Twitter.
Yeah.
Go ahead, Ian. You're the guest.
Oh.
Please speak.
I was just gonna say, yeah, the Bitcoin ETFs are at all-time highs in net flows, which like you haven't really seen mentioned too much, but it's around like 41 billion right now in net flows. So that's pretty good. And to Teddy's point, yeah, like the ETF flows for ETH, not really material. So it's like, who do you guys think is the buyer? I guess we can kind of start there and
For
walk
ETH,
into that conversation.
I think it's for ETH. I think it's mostly people getting squeezed. I think a lot of people do the short like they short ETH to hedge their whatever their longs. And I think
That's my quant.
No, but I legit mean it, because if you think about it, like over the past year, and I hate saying it like this because it sounds really stupid, but I still strongly believe that a lot of crypto is like a lot of crypto flow is retail or like semi-retail, where it's like small funds, basically like 27-year-olds who made money during the food farms, and then now they're just betting on like institutional stuff. And I think a lot of them started putting on the ETH short leg. And then they're just getting blown out. That's my like honest to God opinion. It might be stupid, and I'm sure that if like somebody could come up and say there's actually a better explanation for it, but to me that just makes sense. Like the amount of people who are just shorting ETH every time they want to long the market is.
Our counter argument, which I think we largely agree with that too, the counter argument would be that open interest has increased pretty notably over the past week in ETH. But I think that there was obviously, like Ian has some data on it, there was some sizable liquidations on the short side for ETH, like much larger in terms of market cap share for ETH than it was for Bitcoin or Sol. So I think that may have been a spark. And then maybe these 27-year-olds who have a range of LPs that are like, okay, ETH just moved up 50%. Like, why did the fund completely underperform that? And they're like, oh, we didn't own any. So like, there's probably some like catch up to get exposure to ETH as well. Like, that's kind of a 2-pronged answer to maybe where that move came from. They like just started bidding perps to get exposure to ETH and be like, I can't miss this if it goes to 3,500 or 4,000. So
yeah, like for May 7th, I mean, in turn for Bitcoin liquidations on that like big leg up, there was $394 million of Bitcoin shorts, and for ETH there is 259 million. It's like that's pretty substantial. But then like the Bitcoin short liquidations, kind of like, that was kind of it. There's like that big move, and not too many others. But then the next day for ETH, another 150 million shorts of liquidations. Oddly enough, 142 million of longs liquidated as well. And then the day after, almost another 100 million of shorts liquidated for ETH. So I definitely think there was, to Prakash's point, I definitely think it was just like such a beaten down asset, like narrative wise. Like you had like Gainsey going on like the pump fund stream, just like crashing out over ETH. And that, I mean, it's like that was kind of symbolic. But I think it's like also like, I think it was just kind of how everyone was feeling at that point. And so I think that move caught a lot of people off guard. And then obviously I think there's a lot of momentum trading in crypto as well. So it's like the liquidations are always like good entries for people. And then people just love doubling down on anything that's running as well. So
Ian's liquidation is my entry.
Many such cases.
No, Ron, I was just going to say to finish off his thought there is like, if you look at some of the assets that are going crazy, you mentioned virtuals earlier, and then like, AI16Z, Cerebro, like this narrative trade that kind of ran its course and now they see massive wicks up. Obviously they're much lower market caps, so that's maybe to be expected here, but it's probably a lot of the same behavior, right? Some liquidations, people closing out things, and then some chasing, love the momentum after they start moving. It's just what people do.
Yeah, I about DoubleZero, you said, Ian, you mentioned them. I had Austin on the pod last week. He's supposed to come on next Monday, the episode will air next Monday. That's not relevant. That's not a flex. Just wanted to mention that I'm important enough. More so that it seems like Solana's kind of moving away from this. Like the EVM's still trying to figure out the EVM. Like that's what they're working on, versus Solana's like kind of moving towards, okay, the SVM is fine. What we need like better hardware, or we need to, like in their case specifically, we need private fiber so that we can actually like get through. Like the SVM is working okay, we just need to speed up the dependencies. I feel like this is first of all, I want to understand if you guys think it's necessary. I don't know how much you've looked into DoubleZero, but like knowing that you guys are running a validator, I'm actually curious if you guys are on the DoubleZero testnet as well, or if that's something that you're considering. And second of all, like, do you think that's actually necessary or not? Anybody can take it, either of you.
We're not on the testnet right now, but I do think it's probably one of the most like interesting projects out there. It's like whether or not it's necessary is up for question. I mean, it's like what actually is necessary in the grand scheme of things as well. That's just kind of like an open question. But will it be used? I think absolutely. It's like I think there's like a lot of like revealed preference for landing speeds or landing transactions at the fastest speed possible. So I think like that's not just crypto related. That's like all of finance. And yeah, I think they're going to be pretty cool. I'm excited to listen to that podcast. We got like kind of a sneak peek on one of the validator calls into like kind of everything they have going on already. I'll let that episode air and let him talk about it. But yeah, I think there's some incredible things happening over there that kind of go beyond just what we're trying to accomplish in crypto. And they're literally trying to make the internet faster and try to like monetize, unused fiber. So it's really, really cool.
Do you guys have strong opinions, like thinking about it more generally in terms of where Solana validators and like the network is at today? Is it increasing hardware of validators is going to be big improvements to the network, or is it really like focusing on continuing to just beef up software, fix bugs, land improvements there? Or can, improving network, download upload rates be that meaningful here? I guess, from your operations, is it clear to you, like, they just really need to keep beefing up the software piece of this, or the hardware, or a combination?
Yeah, probably a combination. I would say like it's working pretty good so far. I mean, the simple kind of tagline of like IBRL is just like pretty catchy and just kind of easy to rally people around. So I think it's really kind of from both sides. I think you're kind of seeing two, like in general, chains go in one of two directions of like beef up your validator, make it as fast as possible. That by nature is probably going to squeeze out some like the longer tail validators that can't be running all this hardware, can't afford rack space in the right data centers, where like they might want to be like co-located to certain other things. But yeah, and then the other side of that, it's just like going like super light and just having like a bunch of light clients, kind of like let's say like the Celestia model, more or less.
AlgoKit 3.0 includes all the tools and open source resources you need to unleash the power and performance of the Algorand blockchain. Access a resilient network with instant finality, consistently high throughput and low fees, and layer 1 features like atomic swaps and native assets. No smart contracts required. Whether you're building DeFi protocols, enterprise solutions, or next-gen dApps, AlgoKit has all the tools you'll need to build faster, safer, and smarter. Start building with AlgoKit today by following the link in today's show notes. Ledger is the global leader in digital asset security, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a comprehensive ecosystem of products and services, making digital ownership more secure and accessible for everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, introduced the world's first secure touchscreens, making it easier and safer to manage your transactions and assets. Alongside Ledger Stacks and Ledger Flex, they have also launched the Ledger Security Key app, offering a safer alternative to traditional passwords and enhancing your digital security. Follow the link into today's show notes to get started with Ledger today.
So we want to switch over to Danny, it's your pod, but do you want to switch over to Stripe and
Wow,
stuff?
Bach is so bored. Yeah, let's jump into another combo. This was
I'm
I
not
think
bored.
this
I'm
one
having
come
fun.
this one came from Ian, I think, but I think it's a good topic. It's relevant. There's been a lot of larger M&A deals in the space lately, some from kind of within the industry, some from like maybe fintechs more generally looking to kind of position here. Coinbase and Deribit obviously is a big one recently that's gotten a lot of talk on the timeline, but Robinhood and Bitstamp is, I think, still working through things. I don't think that's meant to be completed until later in this year potentially. And then there was the Stripe bridge deal. So a lot of like large, I mean, obviously Coinbase is a crypto native company, but Robinhood, Stripe, others out there, I'm sure, plenty others that are, generally more fintech or finance related businesses, like really digging their heels in or like making their mark here. Do you guys have like strong thoughts here on how these firms are positioning or like what this kind of trend is signifying? Or just a general take, like what's your vibe on Stripe getting in on Bridge and Coinbase and the Deribit acquisition?
Yeah, I think Teddy has some pretty good thoughts on this.
Regarding Stripe and Bridge, I think it's kind of interesting now. I've seen two different angles. Like the Stripe Bridge announcement was more focused on like crypto native people that are, well, people who own stable coins being able to pay traditional merchants just with the Visa card and kind of have that be seamless. And I think that's obviously a huge step in the right direction. But the PayPal Investor Day, they talked about stable coins actually for 10 or 20 minutes, which was um, cool little shout out. But their general idea is when people like pay merchants or businesses through PayPal, like that immediately leaves the PayPal ecosystem. It's not like when people are paying, like it's not peer to peer. When you and I are using PayPal to pay each other, we know we're gonna have to do it again. No, it's like the merchant just puts it straight in their bank account and it's gone. So like that's the problem because 90% of the time that's exactly what happens. So they're like, how do we keep it in our ecosystem and make it interesting enough to um, provide some additional like utility for these companies? And their idea was like, okay, when businesses get paid, they wait 2 or 3 days for settlement on the ACHs, or they pay 3% on credit cards. Like if they got paid in stable coins, could they want to use them to then pay like do bill pay type work, where it's like they don't want to wait 3 days for their funds to settle, then have to pay whoever their supplier may be. That's like there's just going to end up being 5 or 6% in fees. You're waiting weeks at a time to get people paid. Like maybe you're going through QuickBooks and sending a paper check through QuickBooks and paying a percent on that and a $3 fee to do it. It's like I think that there's a huge area to be explored there, and I think that PayPal is kind of hitting the nail on the head. I don't know how close they are to actually getting people interested in doing that, but I think like offering the product and then like spending years kind of teaching people why that could be good for them makes sense to me for stable coins beyond just like cross-border pay, like peer-to-peer payments.
I think that makes sense. I know from PayPal last year, I want to say they had some announcements around a few businesses who are starting to use their platform for like B2B transactions. So, making invoice payments and whatnot. So the value there I think is clear. I guess it opens up a new question, right? Like with some of the stablecoin and market structure and probably other regulations coming into play now. Like we know recently, I think there's been some announcements around banks being generally allowed to custody crypto, like kind of more broadly. And obviously, if they get clear guidance around what's okay with stablecoins, it might take away some of these hurdles potentially. If they can start onboarding into like these crypto-based stablecoin-based rails, maybe you take away the need for like everyone to just do everything on Stripe or PayPal's network. I don't know. Do you guys have thoughts there? Like, is this a chance for Stripe and PayPal and others to like really try to capture some of that market up before the banks can walk in, or are banks kind of doomed to just sort of be left behind generally?
I think the fintech companies are probably going to be the earlier ones to this. So I don't know where it ends up in 5 years, but I think they'll be the ones experimenting first and like releasing products first, like as we see. So I think generally you're right there. Again, it will depend on like good regulation. And I know that like PayPal has also talked about just like having an internal ledger, like when people pay each other in stable coins, like they're just using their like internal ledger. They're not necessarily going to be using a blockchain to settle all of those transactions. So where it goes, I'm not exactly sure. I mean, at some point there has to be settlement, and I'm sure there will be, but I don't think it's going to be like every time people are paying each other, like it's necessarily a blockchain transaction if it's going through PayPal either. So I think that's something to look out for.
All of this stuff has just like come up over the past few weeks, which is very interesting. Like we had all the Stripe, Ramp, Bridge, PayPal. I actually can't remember seeing, and then we had also like a lot of good tariff news, obviously. But this feels like stuff that's just going to keep coming up over the next year as more and more people coming in. Like the Europeans are always late, so I imagine Revolut will come out with something in like 3 months, say we're offering this. Or they may have already actually offered it, but I'm kind of shocked that we've had a few attempts at this on the crypto side. Wholly Held is one. Gnosis, obviously, but that one I feel like is on a completely different chain. This is the first time that I've realized, wow, like I can get paid in USDC, and I can be, or USDT ideally, and be fine. But I guess there's two things. First of all, I don't understand how, and I assume you guys might not have the answer to this, but I don't understand what chain they're going to use, first of all. And Teddy, you made it sound like they might actually not use a chain necessarily.
Plasma mentioned.
Is that another disclosure you guys have to do?
Yeah, I'll let Ian handle that one.
Yeah, we invested in Plasma. And yeah, we think they're a great team and stuff. It'd be awesome if they use them because they have zero fee transfers for USDT. I think being able to move money around the globe is probably should be like anyone's right to do. If it is actually your money, you shouldn't be paying someone else to move it. If it's like dollarized at least. Yeah, I think that's really interesting. I also think like one kind of like analogous point that came up in a pod with it was the bell curve pod, the one that they just did with Hasu and Leshner. It was kind of about like where stablecoin regulation ends up in kind of say call like the next like 5-10 years. So it's like whatever chain they're on is like one question, but another question is like where this money of what's backing the stablecoins, where it is actually being allocated. Because like right now it's like not really beneficial to anyone but like the issuers. Is this the same model that like banks want to have? Because it's not like it's not in line with like fractional reserve banking or anything like that. So I think that's like kind of another interesting point to consider, along with like what chain does this all happen on. I think no matter what though, like they're going to choose the chain that impacts their business in the most beneficial way. So like they're going to want the lowest fees. It's pretty hard to beat zero if you're using something like Plasma, and they've already had like a couple fintech integrations, kind of more in the emerging markets. But I mean, obviously, these same kind of economics can be highly beneficial for more developed countries as well. When you see like companies like Robinhood offer like zero fee commission trading, it's like, okay, what if we just had like zero fee transfers for stablecoins? Have you guys ever used like Venmo or any sort of like kind of regular services to transfer stablecoins? Do they charge you a fee at all?
I've used Revolut, and they don't charge you a fee, but they do hold your assets because they're like, why are you using stablecoins? So it's they're kind of in a weird spot where they allow you to do crypto stuff, but then they're like, actually, why the fuck are you doing this? Send us all of your KYC information now.
Yeah, that sounds right.
I think they had a fee. It definitely wasn't zero, but I don't think it was very high.
Gotcha.
And I think that Venmo maybe subsidizes PYUSD transactions just because it's obviously they want people to own PYUSD. So I think that's the only one I've really done is sent that kind of across Venmo. I'm not seeing any fees on that. Just looking at.
Yeah, if they do like get into stablecoin transfers, I feel like it makes a lot more sense for them to just kind of own that full stack. Don't really integrate it with DeFi too much. And then like the banks themselves can just have more control over it. And obviously, like, we already saw like PayPal try to integrate into Solana DeFi, and just they threw a bunch of incentives. It just got farmed to oblivion. That's like a really hard market to get into this late in the game for like stable coins, where it's like largely dominated by Tether and Circle. But I think like the last kind of interesting acquisition that was the most recent as well was like the Coinbase Deribit acquisition, which was rumored a couple of weeks ago, and then like finally was announced on the day of their earnings. And Teddy, I think you were kind of like looking into that and some interesting thoughts.
Yeah, I mean, I'd like to kind of see like Deribit's books a little bit more, but just like high level, I looked at their volume over the past year, and it's like, okay, over the past year, they probably generated, and this is before rebates and everything else that's kind of a black box, but probably north of 300 or 400 million in trading fees. And I think that Coinbase could obviously plug and play where they don't need the whole Deribit team to stay around. Like, I mean, maybe they keep them, but like you don't need the same overhead when you already have the compliance, you have the engineers, you have all the infrastructure. So I think that there is a world in which it was accretive in that sense. And it's also like, if they bought it at that multiple, I should check this again too, but I think a lower multiple than like Coinbase's priced earnings. So like if they used majority of their own equity, it was probably a decent buy. And I think that there's some arguments to like, why couldn't they just build out an options exchange? But I think we've seen with their futures exchange so far how that's gone.
Yeah, I wouldn't.
Go ahead.
I'm a bit worried just because of what you said as well. It's like I brought this up at DAS to people and they looked at me like I was stupid, which is fair, but I don't trust Coinbase to build out a good product. I think they've done really good on regulatory side, but I don't think that they offer a good product. Like even their fees are horrible. They go above and beyond to give people a bad customer experience, especially like in terms of KYC and like holding people's assets. And I just think like if they didn't have regulatory backing, they just wouldn't do very well. And I think it's the same thing with Deribit. Like I'm worried that they're going to fuck up Deribit, especially since Deribit is like the only options that people use, like the only options exchange that people use for crypto. And as like more serious investors come in, I imagine there's going to be more and more options activity. So it's actually kind of good if you're like a player in options, you can come in and potentially do better if Coinbase starts like fucking things up. But on the other hand, like if I'm somebody who trades options quite like a lot, I'd be a bit worried. Which I've seen people who trade options quite a bit. They're like, "Fuck, this is going to suck."
Yeah, I think that's very. I mean, since like Coinbase's existence too, they had like Coinbase Advanced app, and then they also had like the just standard Coinbase app, and like one of them they just screwed you on fees, and the other one it was slightly better on fees, but there wasn't like a notable
They're
like
still
performance.
screwing you on fees.
Yeah, now it's all in one app, and it's like not super intuitive. Like you're like always looking for how to switch between like advanced and simple mode, and like your portfolio button looks different on both. So I think that I agree with you there. Like I use them, and I like Coinbase generally, but it's like there's a lot left to be desired, like from a user standpoint there. But I think they bring some like brand awareness where people feel more comfortable like having money custodied by them than maybe they would with Deribit. I don't know if that's true globally, but maybe in the US it would be true. Knowing that it's Coinbase, people are slightly more comfortable. So maybe that's a win, and maybe they just can leave Deribit, like the product itself, alone and not try to get overly involved on that. Because maybe they've learned the same lesson. It's like, okay, we have had now the NFT marketplace, and now futures rollout like have not been perfect. Like maybe we should leave it as people like it. There's a reason we're buying this company.
Yeah. This is partially why I think Hood is just a much better bet than Coin on. like I feel like when people are like, oh, I need to like long some form of institutional like Web2 company coming into crypto, and people always mention like Coin or Hood. I think Hood wins on everything. They're teasing a lot of people right now because the Hood team. I think they're going to half of their clients and saying we're going to go on Arbitrum, and half of their clients are saying I'm going to go on Solana. So we're going to see. I don't know if you guys saw those tweets where people are like, Hood's definitely coming to Arbitrum, and then the other half's
Yeah,
like, we're definitely going to Solana.
that's it's a great PR tactic of just like release leak something saying that you're choosing one of two very competitive ecosystems, and then you essentially get both sides excited no matter what. Um, just of like the news itself. And to my understanding, that was like to trade European equities, like on chain or something. So one, I'm kind of
Ooh.
interested. Yeah, I've been trying to ape Novo Nordisk for a couple months now.
No, I think it's Europeans
Big
can.
GLP-1 guy.
I think Europeans can ape U.S. equities. Nobody
Yeah,
wants.
it would be the other way around there.
Oh, okay. Well, I'm still sidelined from Novo then.
But I will say, like, I do think they've been kind of teasing this idea for a while of using blockchain as the like venue for their trading activities, and I think the plan essentially is to use international markets as that testing ground rather than the U.S. So
No,
it kind of makes sense
what?
this approach with
No,
the
that
UK.
makes
Go ahead, Ian. Were you gonna finish the thought there? Sorry.
No, I was just wrong. But yeah, I think it's one interesting thing that kind of makes me think of though is um, like when we're looking at kind of where the next like expansion can be for any sort of like crypto product or anything like that. Um, I feel like the reason so many people are excited about like Robinhood or any other like institution coming into the space is because like a part of them feels like DeFi might be like maxed out for the time being, and you need some sort of new like capital to come in. And like right now, I think like DeFi on like Ethereum at least is like very developed, where you've got like you've got like a really complex kind of like modular DeFi ecosystem over there where like risk can be like siloed off and you can curate things to your liking, and so it's a much more attractive venue for a lot of these guys to come into. Um, but like on the flip side of that, it's like I think people do generally kind of feel like we might have maxed out what can be done on DeFi right now outside of just like kind of like meme coin speculation and just being like the first to like hit like a SexDex ARB. And like maybe that's not like a horrible thing, but I think in general it'd be nice to uh, be able to just do whatever you want in all of finance, just like on chain. And so I think that's kind of like
Hyperliquid.
exactly Boccaccio.
I think the excitement is, at least from like people within crypto, is that there's an opportunity to see the Binance and Coinbase playbooks repeated with Robinhood, where they have their own ecosystem, they get apps spun up, they promote them, pump them, whatever you want to call it. Binance's strategy lately, they've gone kind of back to the 2021 days where they have Binance Alpha now, so they list tokens and they've been listing more from the BNB chain ecosystem there, and then that's like their pre-list of things that might get to the main exchange. So it acts as like this, hey, look at these things, like look at this stuff that's happening on BNB chain, and then it eventually like filters up. And we've seen Coinbase, like they're doing a lot of things of a similar nature where it's like they're using Morpho on Base for Bitcoin lending. They're playing around with like different Uniswap permission pool ideas, different like direct integrations between the exchange and the chain. And so I think like you just look at Robinhood in the same vein in terms of the amount of users they have, the amount of trading volume that's happening there on both crypto and equities, and like there's an opportunity that they can like suck some of that into a chain that probably they spin up, and some new apps form around that. Maybe there's tokens to for the market to speculate on.
Yeah, I think you're right, Danny. I think that people are like have been patiently waiting kind of for a non-circular like crypto. It's like we've had a lot of speculation on crypto tokens, and that's been the activity on chain. And it's like obviously payments have kind of started to break the ice there, but I think tokenized equities are something people would be very excited about, to be like, okay, people are actually using the chain for something novel that is sustainable and will stick around, and going to bring like a lot more people on chain, whether they know it or not. Go ahead, Ian.
Yeah, I think the really interesting thing for equities would be like, would they allow 24/7 trading of these things? Like essentially, like when U.S. markets close, does price discovery then for like Apple or Tesla and Nvidia, whatever it may be, does this all happen on chain? And if so, I think wherever that is facilitated chain wise, I think that could be like a pretty interesting rev driver. But yeah, like if I were Robinhood as well, like I think it does make sense to just kind of verticalize and maybe explore having your own chain. I think that's a great point, Danny. And I was going to actually pose that question. But yeah, I think it makes a lot of sense.
I'll add, like, so Robinhood equities trading is 24/5, I think, for most stocks now, US stocks now. So like to me, and I don't know, I don't work at Robinhood, so don't take my advice here, but like my assumption or understanding from their kind of public facing responses to things is that like they believe that using the blockchain is the answer to 24/7. And maybe that's true. Maybe part of it is a regulation problem as well. But that seems to be like the idea going in is they'll be able to open up trading of everything like 24/7, do it all on these ledgers. And that'll be, I mean, that's a big win for them, right? Because that's just more trading activity, more fees generated for them.
Tim Cook just LP.
We really got the like both working out now, both on the settlement side where it's like crypto is great because we get not T+1, T+2 settlement, and it can run 24/7. Also, sovereign money has also been working out. So it kind of worked out. I don't know if you guys ever sit down and you're like, wow, like it all actually kind of worked out for crypto. But I have it like once a week because it's worked out. On the DeFi stuff, Ian, you mentioned that we're kind of exhausted. This is not particularly relevant to the pod, but I want to bring it up. In previous cycles, you could do this exact play. There's a new chain. I'm going to buy the first DEX. I'm going to buy the first lending protocol. I'm going to buy the first CDP, whatever. And then you could also say, and the last time this worked was with Solana. I think Jito, Jupiter, Camino, like it's the second iteration. I would even say they're the first iteration. Like I wouldn't count Serum and I mean, I guess Radium did okay, but like I wouldn't count these as like serious DeFi protocols. I still hate Radium. I don't know, Danny, if you noticed this, but I still can't get over how this
Tom's
just
so
hasn't
sad.
been happening. Sorry, go ahead.
I was gonna say Tom's gonna be so sad, avid listener.
No, I'm sorry, Tom. You're great. I hate your front end, man. Please fix it. I feel like this has kind of died out, and like you said, like Ethereum's maxed out. I guess new chains never get that new narrative going, and the only DeFi that we've seen is on Solana and Sui. Any hot takes about this? Do you see us like getting back experimental DeFi season anytime soon, or do you think we're just gonna do the bog standard? Like Teddy, you can also answer. He muted the moment I said he can also answer. Please, guys, anybody can answer.
Yeah, I think one, it's like question where the experimentation and speculation is kind of coming from, and I think for Solana, a lot of that coincided with like a massive run up in the price of the native asset.
Yeah.
So if I was looking at kind of where I think the next wave of experimentation might happen in DeFi, that's like outside of institutional integrations. The number one ecosystem I'd be looking at honestly is Hyperliquid, and that's because I think like if you're looking at kind of what drove the meme coin craze for Solana, that was really just tied to like a combination of great distribution plus like a massive run up in the token, and then just kind of like the virality of some of these coins of them being able to across different like kind of social networks and just get a lot of people excited around like speculating on something. Coins that were moving like 100% in a day at like already like 9-figure valuations, if we can call it a valuation. But for Hyperliquid, it's like you've already got a kind of cult following over there, which is really important. And you've got tons of DeFi activity. You've got good tokenomics that like are actually accruing value back to the token itself. You've got the addition of the Hyper EVM. So if I was like a builder looking to kind of do something new in DeFi, and I wanted a ecosystem where I knew everyone was like really happy to be trading, and there's also like a continued wealth effect, especially now with like kind of the recent slight run up. And I think it has like a lot more room to run in terms of like where people are looking to comp hype to. Like you're comping it to Binance or any of these large exchanges. Like they're now, to my understanding, doing like 10 to 15% of like perp volume for Binance, which is like pretty amazing for a product that raised zero outside capital and is now doing numbers like that. Like that's actually fascinating, and I think it's really inspiring for a lot of builders. I think that's an ecosystem to really like kind of watch, because you really kind of haven't seen this play out yet, Bach, to like your point of, you know, like who's gonna win the lending landscape, who's gonna win the liquid staking landscape, who's gonna like kind of dominate all these subsectors. And I think like a lot of those monopolize pretty quickly. But then like what else comes of all of this DeFi activity taking place, where like you've got a concentrated user base of people that are willing to speculate. I think the only thing they're really missing is like a fandom integration, or like just one of these like large wallet integrations, one of the kind of more consumer apps like a Moonshot or anything like that. But yeah, that's what I think, at least.
Yeah, I mean, I think it's also healthy, like not being able to just rotate to the new chain and buy the first Uniswap fork. It's kind of cool that it's happening in a sense. Like, obviously, it's tougher to make money when you can't just be kind of the first one to bridge over to a new ecosystem and buy the 3 tokens that are there. But it's also pushing to people to build stuff that is actually in demand. Again, like Hyperliquid, they're being rewarded because they built something that people actually wanted to use. So hopefully that is a trend that continues to happen. It's like, don't reward people just for building a blockchain and forking a few apps that have already been built.
Yeah.
In crypto, for quite some time, you could make a lot of money just if you could just like use very basic Etherscan fork functions, and like, you know how it is like write and read. If you could just do like 3 things, you could make. But yeah, I guess I'm not happy actually, Teddy, that we've stopped doing that. I'm not gonna lie to you. I'm quite upset that we've stopped doing that. It's cool in the sense that like obviously it means the industry's maturing if the like very obvious inefficiencies aren't happening anymore. But on the other hand, it's like
but our edge is now gone.
Yeah, well, yeah, exactly. Like a large part of, I think a lot of people that I knew that, because I that was like one of the main things that I loved. Like I loved bridging over to new chains and just checking out what's happening. And I think there was a whole class of group of people who did that, and they've largely either become very, very like good meme coin traders. Like that's what their edge is now, I guess. Or they've just given up on life and they just buy BTC, Hype Soul, and just hold it.
I think the peak of my crypto career was a sheep game on Avalanche, whereas like you just before it launched, you minted a bunch of NFTs and you either got a sheep or wolves, and then like you got to shear the wolf
that kind of
sheeps. And, it was actually kind of fun, and of course it died after like a week, but it was fun.
Great tech though.
Very good tech. On Hyperliquid, I agree with you, Ian, in that I think it'll be the next big ecosystem to do well. I don't think they even need that much to do well. I wrote about this as well. I think they just need like lending and ways to get margin and collateral. I don't think they need like massive, like I don't think Hyperliquid needs an NFT marketplace. They'll have one, and they do have one, and it does most of the most of the gas on the Hyper EVM is spent on it, as well as like on an AMM, but they don't really need it. I think they really just need lending and margins, and maybe some cool ways to get like tokenize the vaults, although that's a bit riskier now. But
yeah, I would agree.
Yeah, I think if it's accretive to like Hyperliquid itself, like the core app, then it makes a lot of sense to me. Because the interesting thing that I see now in the market is like these trading apps just integrating, like everyone who's trading memes, they're now also starting to integrate more and more Hyperliquid perps into that experience. And so it's like if you're just this like speculative retail guy and you're trading Solana and base memes or whatever, now you can do that, and you can also be, long, short, whatever on hype perps, and that's like an interesting combination to where I think the like average user now who's trading in their Phantom wallet or in their trading bot wallet, like you said, Bach, I don't I don't know that they're necessarily going to the new ecosystems to like, check out Hyper EVM, but like once if a token spawns from there and then it goes to 50 million market cap, you can be sure like they'll be looking at it in their trading bot and wanting to bid on it. So yeah, I mean, I think it just depends. Like if someone's going to push up an ecosystem of that type of stuff on the Hyper EVM, I think it'll percolate to the apps and the like experiences that people are doing now. But I don't know that it has to happen.
Yeah,
The lending and all the other stuff could just be accretive to Hyperliquid perps, and that could just be a net positive overall as well.
yeah. But that one's kind of tough because, I mean, Ian, you said like the comp is Binance and BNB and whatnot, which I think is a fine comp to make. But also on the other hand, we've like historically, like the L1 gets a very big premium for being an L1. And I feel like, okay, so Hyperliquid is two L1s. There's a Hypercore, which is the club, and there's a Hyper EVM. And the Hypercore can only get so much of a premium for being an L1 because at the end of the day, you can't do a lot of the, like, it makes money, but for some reason it's treated as a perpetuals DEX, which it should be because that's what it is. Like, you can do spot trading and perps trading, and that's what it is. Versus L1s, like, if you look at Aptos and Sui, the premium that they get is ridiculous. So I think it has to work out. Like the Hyper EVM kind of both doesn't have to work out because there's the hyper core that you can rely on, but also it has to work out to get that like very significant valuation bump. You can't just give a valuation bump to a perp. Like, it's great. I love Hyperliquid, but you can't just slap a 300x. It doesn't work.
I'm gonna disagree, but using the same logic in the reverse direction. Like, I think if you relate it to Binance, like the BNB token did not get a big multiple because BNB chain or BSC was like this insane ecosystem. Like, yeah, it went crazy in 2021, but I think the BNB token got a crazy multiple because it was associated with Binance, the business, which is an exchange. And so I think you can do the exact same math here. And like, if you're relating Hyperliquid to Binance, and it's just like this exchange business at the core of it, then they can pull the same playbook of if there's stuff in the Hyper EVM, you can prioritize some of those assets on maybe, getting onto the Hyperliquid like core exchange, and run that same flywheel that, Binance and Coinbase and Base are doing, which I think is positive, like, because we've seen that work. It's a very effective model.
Yeah. Just to add one more thing, and then Ian, I'm going to let you speak. I'm sorry. You mentioned 15% of Binance, which is true. It's also like 33% of OKX and like 40% of Bybit. So these guys are pulling in like very serious volume, unexpectedly serious volume. To be honest with you, when I checked it, like I'm writing a report right now on the perps taxes, and I checked it and I was like, wow, this is fucking ridiculous. Because the only, at least in my mind, it's the only DEX that has ever been able to compete relatively with sexes. Like before, I guess DYDX was somewhat popular. But like people were shilling GMX heavily, and that was like maybe 3%, maybe 2% of like OKX volume, not Binance volume. So
yeah, I think there's some similarities between like kind of like lore of GMX and Hyperliquid, in the sense of just like they had like big kind of cult followings. I think like I would actually argue as well that like Hyperliquid's probably one of the most organically valued assets, or organic valuations in crypto outside of like Bitcoin and Ethereum, let's say. Because like when we talk about like an L1 premium, it's like that premium, quote unquote premium, is set by private valuations from mega funds that have to allocate a certain amount of capital, and they can only really allocate to projects that are like above a certain size. And that kind of maybe will like lead us into like our next kind of conversation of like the VC feedback loop, like kind of now starting to close, where you're seeing, projects like Move that I think TGE'd at like $9 billion FDV or something ridiculous like that, and have like no real product, no real technical edge, more or less all Fugazi. Everyone who's playing that game from the investor side more or less knew it. They realized what game they were playing at the same time. And like now that's starting to close. And when you're looking for an asset that maybe has like a very organic valuation, I think like Hyperliquid is maybe like one of the only top assets out there that is priced even reasonably like it, and it's still priced like less than Avalanche. And
Yeah.
Hyperliquid, I mean, it's just like ridiculous to say that like a project is doing like, you know, 33% of like OKX, 15% of Binance like per volumes, and it's valued less than Avalanche. And I don't know anyone who uses Avalanche.
Does it have
No, like, huh?
Does Hyperliquid have subnets? Sorry, that's all.
I think that could be it, Teddy. I think you're onto something now. I think we've just discovered the case.
No, but that's unironically, that's literally it. There's nobody who's gonna be like, holy shit, we could bring JPM on like evergreen subnet, so nobody can slap a fucking. I think Avalanche is at like a 400x multiple or something. Nobody can come on and say, holy fuck, these guys can moon. So nobody can slap a multiple on it.
And like they're also just kind of, they created a product which is core to crypto itself, of just like you're an asset ledger. It functions extremely similarly product wise to like any centralized exchange. It's very clean, very fast, good colors. I mean, it's like, you know, there's a green color good. You know, like there's like a lot to love there. And then when you put it amongst its peers, it looks even better.
Yeah, I mean, I don't know how. Danny, do you trade a lot of perps?
No, I've never been a perps trader. That's how I lose money consistently.
Yeah. Teddy, Ian, any perps traders in the chat?
I dabble, but I haven't actually used Hyperliquid that much, just because the barrier to entry at the beginning. So like I used GMX for a while, and I know Hyperliquid is vastly better. And then I've recently just been playing around with Aster Dex, which is just trying to be a fork of Hyperliquid too. And that's
I've spent the past week looking over other perp sexes, and it's just like there's the gap is still so high compared to Hyperliquid. So yeah, I agree with you on that, Ian. I don't know, we'll see. That whole like market finding its price versus VCs doing it on the back end and saying we should actually like, because that's how the VC world also works. It's like if you raise that, like no one wants to do a down round, first of all, and you want like the next raise to be higher than the previous raise, obviously, and like significantly higher as well. So it's tough. I think they've been hurt. Move, I think, is a bit of an exaggeration. Ian, I didn't want to say this on the pod, but I think that's not the best example to give. I would give Barachain probably as an example, as like one that like valuations are clearly compressed, and they're continuing to compress, and that's like also why I think the L1 premium probably goes away as well. Like if they stop making money, they'll stop putting in 300 mil into rounds. Although it hasn't been it's been okay.
Yeah, I would agree with that. It probably is like furthest out on the curve of like ridiculous things we've seen in the industry, for like Move at least. It's like a weird game though for those rounds as well. It's like, okay, if your competitor is raising at a massive valuation, do you just want to comp to your competitor? Because if you comp lower, your token incentives are going to be worth less. And if your token incentives are worth less, you're kind of dead in the water. Yeah. But at the same time, it's like the person who raised at like the higher valuation is also like, do they really have like product market fit? Is there like real, like kind of novel tech here? Are there real developers that like are trying to build something novel here? It's TBD for a lot of these people. I mean, there's monopolistic tendencies in all of crypto and all financial markets anyway. So like, it's a hard game.
Yeah. I mean, I think with a lot of these coins, like if the valuation is such that retail doesn't want to participate, I feel like that's a loss, because you know that's who you're opening up the market to when you TG the token, and if they don't want to buy it, then why even start it at that valuation? You're destined for the chart to look exactly how you think it's going to look. On the Hyperliquid point though, maybe to close things out, like I do think like we're seeing their model work and they're growing, and like this is what everyone says, right? The perps experience is incredible. But I feel like they have a clear path, right? They build out this business as an exchange. So, you know, grow the list of spot assets, grow the liquidity there, continue to grow and expand the perps offering, if you can become the Binance where new tokens and teams like want to list their assets on Hyperliquid on day one and like TGE there, and do deals with Hyperliquid as a venue because that's just where trading happens. That's what people prefer to use. Then there's a path to a very highly successful business there. And it's already from like a revenue perspective, that's clearly already on its track.
And that's the in it thing as well, right? Like not the revenue side, but more of so like launching at a low valuation. I think a lot of people underestimate, like in crypto, what ends up happening is we realize some very basic thing about general finance. Like revenue is important. Fantastic. Great realization, guys. And then everybody becomes hyper fixated on revenue when the reality is that we've seen traditional markets move more and more memey, like at least over the past few years, because retail has become more and more like apparent in markets. So it's the same thing in crypto. It's like if you bet your entire idea of like how the price should move on revenue, it's just not the case. And in fact, retail is very, very important in cryptos, which is if you launch something at 9 bill, the guy's going to look at it and say, you know what, there's like a 200 mil comp. I'm just going to buy that instead. And it happens. And I think founders sometimes in crypto in general, we like over index on the institutions. Like historically, we've been institutions, please come in. We have something to sell you. But the reality is like 20% of the retail does most of the fees. They generate most of the fees apart from the bots and everything. Like these people are important and they have a lot of money to bid these coins up. So I think like sometimes we don't think about that class and we say the institutions have more of the money, and obviously they do, but like the retail is still very, very important within crypto. And I think if you're a chain, you kind of need to appeal to that, which is where like Echo comes in. I think that's a fantastic opportunity for these chains to kind of get like buy-in from the general population. It's like it both, I guess, like helps retail in a sense because they get to buy whatever at the similar valuation to VCs, but it also like helps you as a project to kind of get that buy-in. And then I don't know, Teddy, you guys put in quite a bit of money into Inisha that round. Has that led to you checking out Inisha more or less? I guess let's find out about it live on the pod. Also, Zon listens to the podcast, so please don't lie and tell him the truth.
It's on the to-do list to look into it further.
Very good.
That's our investment pipeline is usually invest and then due diligence, like I'd say probably 6 to 7 months after investing.
Okay. Very good.
I love this founder. No, I really do want to look into it. But yeah, that was I had some money in Echo and I wasn't getting accepted into many groups. And the first group I got accepted into had Initia allocation. So I was like, oh, I guess I'll try it out.
That's pretty good. That's a good allocation to get first try. I mean, now we know in like now
$500 is a decent allocation, you said?
No, I meant like getting it into, well, $500 is quite a bit of money. We'd have to disclose that, but like getting the first opportunity to pop up be Inisha and not Coinzilla is also pretty lucky. Like, what if you were a Coinzilla investor? We wouldn't have anything to talk about on the pod.
Yeah, no, you're right. I do feel lucky.
Very good. Ian, did you guys have to split that 250 or is it 500 each?
It's $4.99 and one.
Dang.
So I'm all in.
You guys are splitting. You're splitting the outcome of that, or
yeah,
how does that work? That's just like a power dynamic between
Ian
you.
skipped dinner that week, so he can put $5 in. No, I just had some stable sitting around, and it's a Kairos Research account, so we can backtrack into how that goes. If it goes well, I'll take all the gains, and if it doesn't go well, I'll Venmo request Ian $250.
Amazing. Well, we love. I think that is one area that I'm still very excited about is like breaking down like existing walls of access for investors to like early stage things. Echo, I think, is a good example of that. I know that Vlad and Robinhood are very like primed on this idea, but there's like regulations, at least in the US, in the way of that. And I'm sure there's lots of other things at play there. But I think it's one like big bastion to look forward to into the future of like continuing to open up more markets that were not accessible to people previously.
Yeah.
And
I think that there's definitely a balance too. It's like raise at a fair valuation where you're going to get enough capital to build what you're trying to build, but don't try to fully maximize that and then screw people that you're supposed to be aligned with. So I think there's a balance, and we're hopefully going to find that soon.
Love it. Well, we can call it here. I think that was pretty good. We dived into a bunch of stuff. Before we close out, though, we got to do a round out of shout outs to one, join the 0x Research Telegram. Lots of fun stuff happens in there. These guys from Kairos Research are in there, available to chat. James Kristoff, the legend, will be in there. All the Blockworks Research analysts and data and various other team members are usually in there chatting it up. So come in with questions or memes, whatever. We love when you guys hop in there. And then check out the newsletter, 0x Research newsletter, drop in daily during the week. Interesting stuff, tidbits, stuff about the markets to keep up with. So awesome. Do you guys have any big closing thoughts?
Wait, before we end, can I actually do something?
Always. He's joking.
I completely lost my.
He's joking it. Bach, you good?
Yeah, I'm good. Are you, Ian? You're coming to permissionless. Is there anything you would want specifically? I know that sounds weird, like because in general, Teddy, you can also chime in, but you're not coming in. So unless you want to do that, Yano can ordain. I think it's fine if that's something that you wanted to do. But Ian, is there anything that you want to do so that we can get it set up, me and Danny?
I think I saw on like the agenda there's gonna be like some debates. I think like those are kind of interesting to hear two sides of like one thing, just kind of like straight back and forth. I think that kind of stuff is helpful. I went to last permissionless I was at was like 23, I believe, in Austin. I missed out on Salt Lake City last year. But it was great. Yeah, it's like a pretty builder focused conference. Doesn't feel at all like consensus or kind of like one of those ones where feels a bit like those feel a bit more kind of like normie esque.
Yeah,
and it doesn't feel like an ETH Denver type either. It's like it's a really good group of folks. Like I feel like you got just a lot of people that are already deep into the weeds, and so the conversations you can start are like 1 or 2 degrees deeper than you'd have to start otherwise, of like just talking about stable coins with people. Like you can get like pretty like esoteric, but yeah, I think just kind of I'd like to see like more kind of opinionated debates on maybe like highly contested areas. So yeah, from people who don't think alike.
Bach, he wants to see more debates where you ask VCs point blank if they're valueless or not. And I think everyone loved that.
Okay. I'll give the lore on that. It was actually originally supposed to be somebody else. It wasn't just supposed to be Mike and Hasib, who actually did a fantastic job. Like, they're great. But it was originally meant to be like Hasib and Mike versus like other non-VC people. Obviously that didn't happen, so it kind of looked awkward, but I think I played it really well. Like I think I kind of did a great job. Let me know if you guys agree. The second thing is, I'm happy you mentioned that permissionless is a different thing, because I went to Token 2049 in Dubai, and it was dog shit. I don't know if I'm supposed to say this on the pod, but it was just so fucking bad. Like, I went and it's immediately like Coinzilla and like people coming up to you and saying, "Hey, I have like this perps exchange that I'm running," and you can tell that they're just going to take your, like, you deposit and immediately goes to the guy's bank account. It was just horrible. So this is like, oftentimes I ask people like, "Are you going to come to permissionless?" Because I'm on a commission model. And I asked them, like, are you guys gonna come? And they say, no, I never want to go to conferences because they're always dog shit. But like, I've been to Blockworks conferences, they're not dog shit. They're actually quite good. Because we don't have people coming up to you and trying to scam you. It's like actual regular human beings who are just in crypto because they like it and they want to chat to you about looping stablecoins and whatnot, but nothing scammy, just regular smart contract risk, nothing further than that. So if you are somebody who's listening who's saying, I never get any benefit off of conferences, I think you should consider just coming once, and then just checking it out. Like, if you haven't been to permissionless because you have some pre-created notion that it's going to be dog shit, I think you're going to be pleasantly surprised if you do show up. That's my like very genuine shill. Danny, I interrupted your closing remarks, so please finish up.
So permissionless, we gut check the grifters at the door, so they're cleaned up by the time you get inside. And 0x10, 10% off. Bach will be in the dunk tank. I'll be in the dunk tank. Maybe we'll get Ian in the dunk tank. We want to get Yano and Mippo in the dunk tank, and maybe we'll get some VCs in the dunk tank. That would be amazing. I know there's people out there that would love that. Who knows if they would agree? Probably wouldn't, but it would be funny nonetheless. But yeah, we'll see you guys there. End of June, 10% off, link in the description, as always. And thanks for coming on today, guys. This was a great chat. And to all the listeners out there, we will see you next time.